Hi there YouTube and welcome back to the channel. In this video today we're going to talk about two very important entities, Fannie Mae and Freddie Mac. Who or what is Fannie Mae and Freddie Mac, origins of when and why they got established, and things to know when applying for a mortgage with them. But before we get started guys, please remember to subscribe to the channel, like the video and share it, and put a comment for any other mortgage topics you want to learn about. So let's review the simple and basic stuff first. So both entities share the same line of duty to the mortgage industry, and that is that they both buy mortgages. Fannie Mae and Freddie Mac are the largest buyers technically of mortgages in the US, excluding the private sector, and both create the underwriting guidelines for conventional mortgages. In addition to that, they were both created by the government for the same purposes, for the same reasons, but in different periods of time in history. Which brings us to the actual history part of things before we dive into what each one does and how. So, Fannie Mae was created by the government back in 1938 as a result of the Great Depression as an entity to help and support the banks by buying mortgages from them. Freddie Mac was created for the same reasons, but later down the road in 1970 as a second buyer entity to help and support and take the load off of the massive spending from Fannie Mae. So now we have two secondary market entities buying mortgages from banks across the United States. And with the basics on these two out of the way, let's review Fannie Mae a little bit more. So Fannie Mae is a government-sponsored entity, and that means that it's controlled and regulated by the federal government. Now, Fannie Mae plays a very big role in the financial markets in the United States because Fannie Mae buys mortgages from banks. That allows those same banks to then buy more mortgages, allowing them to increase their revenue, grow their book of business, and offer more products. Now, all of these loans that Fannie Mae is buying are all turned into a pool of loans, which is what we call mortgage-backed securities, MBS in short, or bonds that Fannie Mae then sells to investors in the secondary market. Now, in addition to buying mortgage-backed securities, Fannie Mae also regulates the underwriting guidelines and conditions required for conventional mortgages when a client is looking to get approved for one. Fannie Mae stands for Federal National Mortgage Association, or we also call it DU. And moving on to Freddie Mac, our younger sibling. So Freddie Mac was established 32 years after Fannie Mae by Congress as a need to have another government-sponsored entity to help and support Fannie Mae. And that's by expanding the secondary market to allow more mortgage buying from banks all across the United States, but also to offer additional qualifying guidelines to broaden the options clients have when trying to get approved for conventional mortgages. So just like Fannie Mae, Freddie Mac is a secondary market investor buying mortgages from banks. Freddie Mac is the Federal Home Loan Mortgage Corporation, or LP. The last piece of information I want to give you guys is when and how do we use Fannie Mae and Freddie Mac. So let's just say that we have a full application in place. What we typically do is we review income, credit, work history, and cash reserves. So with all that in place, before we're ready to send the application to processing and underwriting after verification, we need to figure out where would our application have the best chances for approval based on some of the differences in underwriting guidelines between Fannie Mae and Freddie Mac. Now, it's important to know that we don't need both of them to approve the file, but just one. The submission process to Fannie Mae and Freddie Mac is actually very simple. Each one of those entities have a portal we can send the application through. Now, their system basically reads the application we have, and based on their guidelines, it gives us a result in that system. What we want to get back is what's called approved eligible. That means that that system read through everything and gave us an approval to move forward with it. And the last piece of information I want to share so people would know is that most lenders nowadays would require the loan advisor to get a complete file done. That means that we need to have a complete application in place, all documentation, and that approved eligible status in the system. Only then, once we have all of that, we can submit the file for further processing and underwriting. And this is it for our video. So thank you guys for watching. I really appreciate you all. Please remember to subscribe to the channel, click a like, share the video as well, and leave a comment for anything else you want to add or any other mortgage topics you want to learn about. So again, thank you very much, and I'll see you on the next one.